Why aren't home prices declining with unemployment at record highs? That's what we're going to discuss today, along with the topic of forbearances and why forbearance doesn't actually mean foreclosures. Now, over the last couple of weeks, I've done a lot of videos on forbearance as well as market updates, and on a lot of the comments on those videos keep referencing, forbearances equaling more foreclosures, and they keep asking, why aren't you factoring in all of this stuff to come down the road? So we're going to talk about that along with home pricing, like I mentioned. But before we get into it, my name is Jeb Smith. I'm a real estate broker here in Southern California, and I want to ask a favor. If you like all things real estate related, do me a favor and hit that subscribe button in the bottom corner there. It accomplishes my goal, one, of helping get out to more people and reach those that are looking for information on real estate, but it also helps my goal of educating buyers, sellers, and homeowners, especially through crazy times like this, and helping make sense of a crazy market. So do me a favor, hit that subscribe button and give me a thumbs up if you like this content. So let's talk about the first question that I ask, and that's, why aren't home prices declining with unemployment at record numbers? Well, let's start off talking about what drives home prices to start. Like, what makes up a perfect market? Well, a perfect market really consists of low inventory, so you have very little available homes for sale. You have high demand, so you have a lot of buyers wanting property, and you have low interest rates, right? Money is cheap, it's easy to get financing, etc. So those would be the three main drivers of what I call a perfect real estate market. One that really benefits sellers over home buyers, and one like we've experienced really since 2012 in Southern California. And so we came into this year at already low inventory levels. So inventory levels were very, very low, buyer demand was high, and interest rates were low. So we had kind of, the perfect mix of a real estate market coming into the beginning of the year. And when the pandemic hit in mid-March, what we had was a lot of those available homes that were on the market come off the market. Buyer demand slowed, but interest rates kind of stayed where they were. And so as we moved into April, the same trend continued. But as we moved out of April, what started to happen was inventory was picking up a little bit, but buyer demand really started to pick up because interest rates were also moving downward. So now we have even lower interest rates than we had at the beginning of the year. Inventory levels comparable to where we started, but buyer demand has started to pick back up. And so that right there has created this perfect storm, if you will, with regards to, a seller's real estate market. And that's one which prices don't really go down. Now, the difference in the market that we're experiencing right now versus what we experienced in 2007 and 2008 is in 2007, 2008, there was a lot of inventory on the market, a lot of property for sale. And so while buyer demand, wasn't nearly comparable to the amount of properties for sale. So it became a buyer's market at that time. And when you have a lot of property for sale and not that many buyers, it favors buyers over sellers. And that's why prices started to come down, right? Because it became a buyer's market. And that, along with big foreclosures and, a big amount of foreclosures hitting the market, started to drive prices downward. And we saw that downward move in pricing really until 2010, 2011, at which point pricing started to pick back up. 2012 was when the market started to turn, and then it's really kind of been on an upward incline since that time. Now, the big difference, like I mentioned, was the number of available homes for sale at that time. Right now, we have, probably the lowest inventory levels that we've had with inventory dating back before the 2007 recession. So our inventory levels that we're experiencing right now are lower than we've seen in the last 15 years in the real estate market, which is very, very low. And we have a lot of buyer demand out there due to low interest rates. So that's why prices haven't declined, is because it becomes, basic economics where you have a supply and demand. and supply is very low, but demand is very high. And so as long as that stays the way that it is, you're going to see the prices continue to move sideways, in some cases up. Now, keep in mind, with the pandemic still out there, there's a lot of people that are going to be hesitant to put their homes on the market, right? For a number of reasons. One, they don't know what to expect, right? They don't know, what the market's going to do, so they're hesitating in selling. You have some people that don't want to sell their property because they're looking at the inventory levels that are out there, and they don't see something that they could buy, so they don't want to put their house up for sale without having an opportunity to buy something. And then you have the people that are just don't want people walking through their house right now because of the unknowns with the virus and everything going on, right? There's a lot of unknowns out there. So inventory levels are likely going to stay low for the foreseeable future. Buyer demand will likely stay where it is, just because of low interest rates. It could pick up in some cases, but I would say it's probably going to stay steady, just because of interest rates. Now, a lot of people are saying, well, what about when all of these forbearance turn into foreclosures? Well, I don't see that happening. I've done a lot of reading on that subject. I've posted a lot of videos on that subject. And one of the things that I've read is that nearly 20% of the people that actually took forbearance on their property didn't actually need it. So you've got 4.8 million people that did forbearance as of the last numbers that came out. So if you take 20% of those people and say, well, they didn't even need forbearance to start, they could continue to make their payments the whole time. And I've even had people reach out and comment on my videos saying, hey, I actually didn't need it. I just took it just in case, or so that I could use that money that I'm saving on my mortgage to buy stock or to do something else with, pay off credit cards or what have you. So I do know that is a number. There's a number of people out there that didn't actually need forbearance that took it. So you take that portion of the people out. And so out of 4.8 million people, if you take 20% out, let's just say that leaves you 4 million people. That's still a lot of people that are in forbearance. Well, as we know, Fannie Mae, Freddie Mac, FHA, VA, they have done things to assist with those that are unable to make their payments by creating different repayment options, whether it's repayment plans, whether it's a loan modification, whether it's deferral, taking all of those missed payments and adding them to the back of the loan and just picking up where you left off. That right there is going to give a lot of people an opportunity to continue making their payments. And at the same time, if those people can't continue making their payments at that time, they have other options. They don't just have to foreclose. It's not like you come to the end of forbearance and they take your house. That's not what happens, right? You have an opportunity to potentially sell your house. You have an opportunity for that loan modification, for different loss mitigation options with your servicer, with your lender. So there's a lot of reasons why you're not going to see a huge number of foreclosures at the end of this. Now, are you going to see some? Absolutely. You're definitely going to see some. You're going to see some people that think that this is just going to go away, and that those will resort to foreclosure. You'll have some people that are upside down on their equity for whatever reason because they bought with little to no money down, and they don't have the ability to sell their property because of selling cost and commissions and all of that stuff, and those could result in foreclosures. But the majority of people that are going into forbearance, at least in my eyes, have a different way out versus foreclosure. So I don't think you're going to see this huge wave of foreclosures come to the market for that alone. So there's options out there for people, and as some of that, those properties come to the market, right? That's just going to increase inventory levels closer to where they should be, right? I mean, if we're still in the situation that we're in now, which is very low inventory levels, foreclosures, I'm not saying foreclosures are a good thing because they're not, but we have been at record low levels across the nation with regards to inventory for years. And this is because of the restrictions put back after the last recession that we went through, limiting home builders from building property, etc. So, we actually need inventory, and I'm not saying that foreclosures coming to the market is a good thing or whatever, but it will give, more inventory out there, which would create a more balanced market. So, I think that they came out today. I can't remember who came out with it, and I apologize here, but I'll put it in the comments below. But they're expecting a small decline nationwide in pricing, and this is the first time that they've predicted this in 9 years, and that is I think a 1 or 2%. I think it was a 1.9% decrease in pricing nationwide, and that means, that number doesn't sound like a lot, but some markets will decline further than other markets. But a small decline in pricing, regardless of whether that's 1%, 2%, or 5%, is very little in the scheme of things if you are planning on buying or holding your house for an extended period of time, right? Those people that are buying a house now and are going to hold it for 5, 7 years, 10 years down the road have very little to worry about in my eyes, right? In the long run, real estate always wins. It will continue to win. All right, so you can see I could go down a rabbit hole on this topic, but that's the reason that I feel like pricing will remain stable for the foreseeable future. That's the reason I'm not seeing a decline in pricing, just because of the amount of buyer demand out there, because of low interest rates, and because of inventory levels. I think inventory levels are going to stay this way for the meantime. And I also feel like if there is a wave of foreclosures that comes, which I do think some will come, like I've mentioned, but not this huge wave that people are predicting. It's years out. It's not going to happen in 6 months. It's not going to happen in 12 months. Keep in mind that under the CARES agreement, people are given up to a year of forbearance if needed. And so this started in March. So people have, in theory, up until March of next year to stay in forbearance, at which point other payment options would be or could be worked out at that time. And then let's say that those people said, hell, I'm not going to make my payments anymore. I'm just going to stay in my house. It takes months to foreclose on property, sometimes years. So this is something, it's kicking the can further down the road, but for the foreseeable future, I don't see this affecting our market. So that's my 2 cents. And again, I encourage you guys, if you have questions, if you have comments, you have something you want me to touch on in a video, do me a favor, comment below, reach out to me directly. I'm happy to have that conversation with you. But as always, I appreciate your time, I appreciate your support, and look forward to seeing you again soon. Have an awesome day. Bye-bye.